user of Twitter. And I think in the last year, it has become exceptionally unusable.
Well,
They should fix that product quality problem.
In fairness to Sachs, he did pay $10 per account to have those created and to troll your replies. But it is true. I always screenshot it. I look at who's like trolling me in replies, and inevitably it is a 6-month-old account that's following 100 people and has no followers or 5 followers, and it has like some large. But I mean, it's like every numbers time, at the end of the name.
Every time you say something, every time I say something, it's like every other comment is about a stock. It's about a crypto thing that they want you to click on. And so, this last month, I've started to experiment with turning comments off. And it's been the best because I can still communicate out. It gets the same reach. Millions of people will see what I have to say, but I don't have to deal. And all of the other people that follow me theoretically for useful information don't have to deal with all of the bullshit that comes with it.
Yeah, but you can also pick.
There's a real problem on that platform that needs to get fixed.
Here's the thing. It's easily fixable because if you go to LinkedIn or Facebook or Instagram, you don't see this. So if the other platforms can figure it out across many different companies, it's not like there's some secret sauce here. You just have to put up, a couple of reasonable gates and have some reasonable reporting, and you take a little friction out, and people will not be able to create bots en masse.
Yeah, I noticed that problem, in the early days of the Ukraine war, when I would tweet out my opinion, my contrarian opinions, my non-consensus opinions on the Ukraine war.
You get attacked. I remember you were getting attacked. Oh my
God, it was ruthless.
But those are not real people. Those are not real people. Those are algorithms.
When you would go click on those accounts, you would see that they were accounts created that month. With 0 followers, 0 following, and they were brand new accounts without any history, and they were all tweeting the same thing, accusing me of being Neville Chamberlain. It was all just, Putin talking points or whatever. So there, I think particularly when you speak out against the current thing, there's, an organized effort to try and drown you out. But look, the Washington Post had a story about this, that Ukraine was really good at what they called strategic communications.
Yeah. Misinformation.
We used to call that propaganda, but in any event, look, there is absolutely a problem
It's now a playbook. I don't know if you guys saw the Zack Snyder recut of Justice League. Supposedly, there were bot armies that put the pressure on Warner Brothers to release his cut of that movie, and that he might have in some way been involved was the insinuation, and it actually drove commerce. They gave him the $30-40 million to recut the film. All right, let's talk about markets, since that's what everybody really comes here for. Looks like inflation is finally maybe getting a little pushback. Gas and oil is way down. Big win for Americans, and obviously the administration. There clearly is an upper bound to how much people will pay for a gallon of gasoline. Consumption is actually going down, which is interesting. Humans pretty adaptable there. Jobs, and we've talked about this every month as we watch it. Finally dipped under 11 million, as Sachs predicted. We're going to shed 300,000 or 400,000 jobs, it seems, every month, which should take this, 10, 11 million number over the next year down to maybe 5 or 6, which would still be an unbelievable number. Still put us at very robust full employment, which has been a big question.
Also, there's a number of open job, the number of job recs. It went down by something like 500,000 in 1 month.
Yeah, and it's been going down 300 or 400. So it's kind of been pretty consistent, but there's clearly something going on here. And the stock market, interestingly, we've started to see a little bump here. Even crypto, which the most speculative of all assets, I guess. Bitcoin bounced as well, hitting 22, 23 now. So what do you think, Chamath, about markets? You may have called the bottom here on the program a couple of months ago, and I started J trading 3 weeks ago based on our discussions here, thinking we're bouncing along the bottom. Is it a head fake right now?
I think at the time, initially, I think I said, it rallies to around 4,000. I was a little off. Rallies.
What rallies to 4,000?
The S&P.
Yep.
Probably gets to 4,200, 4,300. Look, it's always important from my perspective.
Trading at 41.50 today, just so you know.
Yeah, it's always important from my perspective to just take the other side and just intellectually debate with oneself. why the other side could be right. So at this point right now, what people would say is, okay, the Fed's going to capitulate at the beginning part of 2023. We have a pretty clear forecast for all the rate increases that have to happen. Everybody's doing the work that's necessary, either raising prices, cutting costs, or doing both, letting people go, et cetera, et cetera. So maybe we're there. Okay, so what's the other side of that? Well, I think, again, as I've stated before, the other side starts with energy. And the reason why I think it's important is that it really is the conflation of an economic system and a political system using an instrument. And if you look inside of what's happening in Europe, there's a lot of complexities here that I think need to get unpacked. So, for example, a couple days ago, the French government basically said that they're going to start producing less nuclear energy. And you'd say, well, why would they do that? Well, it turns out because, the temperatures are so high, you cannot use the water to cool these nuclear reactors because the exiting water is then so hot that it would actually destroy the ecosystem of the lakes and rivers that they use to feed natural fresh water in to cool the nuclear reactor. Second, because it's so hot, all the rivers are below their natural level. Barges that carry coal and nat gas are getting stuck on the Danube. The Po, which is the longest river in Italy that feeds all the fields, actually is below the level where it can actually offload the water. So farmers can't basically do what they need to do to produce a food supply. So if you play all of that out, you start to see an issue where by, October, November of this year, we're back into the same complexity where energy is the tip of the spear around which everybody starts to debate all of the national security issues that we have to deal with, the Ukraine war, et cetera, et cetera. So I don't know. I mean, you've made a lot of money this year by basically doing the following, which is the exact opposite of everybody else. When everybody else was freaking out, had you bought, you would have made a ton of money. Now everybody's like, it's over. And you can tell that by looking at the VIX, which is the volatility index. We're about to get into the high teens. You have systematically, it has been true that when the VIX is in the teens, you tend to basically buy volatility, which is essentially you get short stocks. And when the VIX is in the 30s, you tend to basically sell volatility and you buy equities because we've hit the bottom. If you've been doing that for the last year, you've made a ton of money. So there you have it. I really don't know what's going to happen from here, but I tend to think things still have to get a lot worse to flush everything through the system.
And for people who don't know, the VIX is the ticker symbol that you can look up yourself for the CBOE's volatility index. Just measures the stock market's expectation of volatility based on the S&P index's options trading. If you look at oil, Sachs, we are now down to $87 for a barrel. Haven't been here since, looks like, February maybe. And gas prices plummeting. Something going well in this regard? What are your thoughts?
Yeah, I mean, it's that particular commodity is coming down. I still think we have a big inflation problem.
Why do you think it's going down?
I guess production's stepping up. I mean, in response to higher prices, people increase production, and the price comes down.
No. There's less demand. The crazy sad thing about this whole thing with Biden was that OPEC came back and they basically said we can increase like 600,000 barrels a day. But the only two countries that are able to do it were, I think, Kuwait and Saudi. And the total number of barrels was about 100,000. So with all the bluster and all of this stuff,
you're right. Actually,
there's no supply.
It's because the interest rate increases are actually having an effect.
Correct.
These rate increases are like chemotherapy. It's on the economy.
The gas demand is lower than the summer of 2020 in the middle of the pandemic.
Yeah,
in the United States.
Yeah, you're right. So the commodity prices are reflecting expectations that the economy is slowing down and maybe in a recession.
So supply modestly up. Demand massively down equals, hey, we want to get people to buy this commodity, it will lower the prices. Lo and behold, the same thing is happening a little bit with groceries, and we'll see what happens with travel. Homes also spectacularly falling down in price, and the inventory spiking as well. So what's your your take here. Unpack the 75 basis point increase in the chemotherapy that you were going down that road.
Well, let me just speak to this rally in the market for a second, because I think there was a really interesting chart that Philippe Lafont showed at that COTU summit that we talked about on this pod a few months ago. And I'll just put it on the screen. I put it in the chat. What it basically shows is that during protracted bear markets, you can still get substantial bear market rallies. And so during the 2000-2001 dot-com crash, you had these plus 32%, plus 41%, plus 45% rallies, but even while the market as a whole was going down. And so they ended up being sort of sucker rallies. Now, I don't know if that is what's happening here, but it is a possibility.
One interpretation, Sachs, of this could be people are picking the winning stocks while the losers continue to lose, and that's what's causing this, jagged edge or the dead cat bouncing, as they say. Which is what we're seeing in a lot of these public companies, right? I don't know if you're watching, but Uber, obviously I'm still a big shareholder, had a massive print, and other companies have been doing equally as well, Apple included.
I think two things happened last week. One is there were a number of companies that reported good earnings, and I think even more importantly, has strong forecasts. So that helped. And I think it was just there was so much pessimism and negativity that just companies reporting decreases that weren't as bad as people were expecting created some room to move up. But the other thing that drove the rally is that the Fed made these comments on the heels of that 75 basis point rate increase that we were close to neutral. And so the market seemed to get really optimistic that we wouldn't get much more in the way of rate increases. Maybe there'd be a 50 basis point rate increase towards the end of the year, which would bring the Fed funds rate up to about the 2-year bond rate. So the idea was we're close to neutral, and markets really reacted to that. The thing about that is, though, that I think what Powell and what the Fed says today about rates is way less important than what the inflation data will actually show in a few months. If we still have 9% inflation 3 months from now, then I don't think the rate increases are done. So at the end of the day, I think that the data here is going to be a lot more important than what the Fed says, because certainly the Fed has said a lot of things over the past couple of years that turned out not to be true.
You would agree they seem to be doing something correct here with the 75 bips, and taking it a little more seriously. It's having an impact.
I'll say it again. I've said it now 5 pods in a row. We've never seen a moment in history, in American history, where when CPI has printed successively above 5%, that it got under 5% without Fed funds getting to that same number. So we should all hope that this is the exception that proves the rule, but there's an enormous amount of data that would tell you that we have to take rates to double what the equilibrium rate is thought to be right now.
There was no print in August. They take the month of August off. They could do an emergency print, and then they're expecting 50 or 75 bips in September. If they do that, Sachs, Chamath, Freeberg.
I think 50 is the expectation for September. But look, I think it's appropriate now, after all the rate increases they've done, to take a pause. They're going to get 2 full months now of inflation data before the September Fed meeting. I think it's appropriate to let the economy digest these rate increases and see where we're at. And let's see where the next 2 months inflation print is, and then that'll determine what happens next.
Freeberg, based on all this, what's your outlook for the economy?
I think there's more. We all try